Welcome to the Cost of Everything podcast. This week, I talk with Dr. Daniel Diaz, founder of Value2, and we discuss value to society and how decision makers can take this into account. Okay, so value. It's a word which is often used interchangeably with price and cost. In certain circumstances, they can mean the same thing. But actually, there is a more intrinsic quality to value that is often not costed. What is the societal impact when child labour is used to produce a bar of chocolate, or when farmers are exploited to produce the grains in your cereal? I discussed the value to society with Dr. Daniel Diaz of Value2. So, Daniel, thank you for joining me today. Really looking forward to this conversation. Have read a few of your articles on your website, and I think this is going to be a really cool episode for the listeners. So thanks for joining me.
Pleasure. Looking forward to
it. First things first, a bit about you and for the listeners anyway, what your background is. I mean, we're going to talk about social value predominantly, but a bit about your background and how you got into sort of cost and social value.
Sure. It goes back to about 1998. One of the last, I suppose, leaving thoughts from the London School of Economics was a lecture around market failure, being responsible for a lot of the environmental and social problems that we experienced back then, and they've largely magnified since then. Which then led to this idea of that these externalities exist in the marketplace, these external costs and external benefits. So these are inputs and outputs of production that just don't have a price. And as a result of them not having a price, they tend to get overused. And that made me think, leaving LSE, I was thinking about that. And then that led me to set up a company with others called TrueCost PLC. And TrueCost was all about, pricing back in environmental goods and services into the way that the companies structure their financial accounts. So big companies, are releasing pollutants and using natural resources, and many of the ecosystem services are, not priced by markets. And as a result of that, we get lots of environmental deterioration. So TrueCost is all about, we can quantify that stuff and we can find a way of putting a value on it. And then once we've done that, then we can bring that back into decision making, as simple as that. And that was back in 2000, we set TrueCost up. And that, I wouldn't say went particularly well. It was very exciting. We got quite a bit of attention, but we were a little bit premature in our thinking back then. But TrueCost eventually, is still around, and it was acquired by S&P Global, I think in 2015, something like that, and is still functioning. So it managed to survive and is now part of a huge corporation doing pretty much the same thing. But through that, then, I noticed there are a few things that could be improved. I ended up doing a PhD with Robert Costanza, who's reasonably well known for his work on putting values to the ecosystem services. And I did that at the University of Vermont, at the Gund Institute. And it was, and that was while I was at TrueCost. And then it was through that I started thinking, well, it's wider than the environment, which is where the ideas for Value2 started developing. And then in 2011, we set up Value2. And then since then, we've been working with corporations globally across all sectors, including the kind of finance space. And it's pretty much the same thing. It's about, quantifying their impacts. This is business impacts, translating that into value terms, giving them a broader picture of business performance, integrating that into decision-making systems, and then using that as a mechanism to help them improve, their kind of wider impacts on society.
What made you do the PhD, and also what were the outcomes, or what were you looking for, and then what were the outcomes? Because that's two different things usually with the PhD.
Well, the PhD was really because I kind of left LSC and I was thinking, this looks like a good idea, and then we created a company, and that.
That's the normal way with the PhD, I think.
Yeah.
I don't know how long it is before you get into it that you think that regretful thoughts about that, but yeah.
No, not at all. And so I just felt that there was a few things that I needed to kind of button down, and Robert Costanza was part of the advisory panel. So, and it just seemed like I was continuing to work at Trucost as well, but I was doing it remotely, and then working with Costanza and the people at the Gund Institute. Some interesting people happened to be there at the same time. So one of my colleagues was Brendan Fisher, and Brendan is now a pretty leading academic in again, ecosystem services, its linkages to poverty, the value of these services, et cetera, et cetera. So it was a really good time to be there. I mean, it is minus 30 there in the winter, so there were some brutal moments, but generally it was a way in which to consolidate thinking, to realize that this is wider than the environment, to explore those avenues, and to kind of just understand the economics of it a bit better. Some pretty interesting avenues to be explored, and that all led to me creating Route2.
It's interesting the reasons why you get into a PhD as well. I just wanted to kind of get into that, but you've mentioned the term ecosystem service a few times, and I have a feeling that a lot of our listeners won't understand exactly what an ecosystem service is. But for me, I only recently found out that there was a term for what we do, what the environmental sector does. Briefly, I don't want to turn this into a lecture or anything, but what is an ecosystem service?
I mean, in essence, they are the benefits, the functions that deliver benefits, to humanity, and some of those things are pretty obvious in the sense of things like food and minerals and water. We all understand that these are derived from the environment, but then also kind of clean air and climate change or climate regulation that obviously helps prevent climate change. Things like nutrient cycling. So just the way that the ecosystem functions is the result of a whole series of processes that combine to deliver functions that we derive benefits from, some of them more direct than others. And that as a whole set are called ecosystem services. And, even recreation, is probably a pretty tangible one for the listeners. That is, so if you go down to, the canals or the reservoirs or the beach, anything like that at all, go for a walk in the forest. I mean, that is a recreational pursuit that is, produced by nature and by the environment. And, as we slowly degrade the environment, those experiences become less pleasurable. So it's important that we invest and recognize its importance to our well-being. So that's the whole kind of ecosystem services. And then, that's, I was just talking about it from a kind of UK perspective, but we are very much dependent on many global or regional ecosystem services as well, such as climate regulation. So yeah, it's a fascinating area. And as I was saying, I mean, so that was the main focus of Trucost was the environmental side of things, but it was missing other aspects of the impacts of business, and that was what has been addressed through Route2.
So it does take us on to a bit more about Route2, and it's something that I want to explore because I came across the company from seeing articles on LinkedIn, and one of the ones that drew me to it was one that was shared on Children for Chocolate, and I guess we're in that holiday season where I tend to overeat on and come out regretting it in January, which is a cost to me, but there's a lack of awareness, I would say, generally. So we're all getting aware of the impact of carbon on the environment, and we understand that there is the environmental impact of human activity on the world. For years, there's been an understanding of things like farmer exploitation, child exploitation, and things like that. And I know this is an area that you've looked into as well. So I think let me break that up because there's quite a lot to take on there. Just start with, what is Route2? What are its its aim and objectives? Let's keep it to that for now, actually, because that's quite a bit as well. So what is Route 2?
So Route 2 is it's a business, and it operates at the moment as an advisory organization. We advise, as I said, corporations globally, and also a number of kind of investment firms as well. It was established to build on the work that we did at TrueCost, and the learnings from the PhD. It's different in the sense of that it captures a wider set of impacts beyond the environment. So you mentioned, I think, child labour. So, for example, we look at the impacts of child labour and its prevalence within all sorts of inputs that we consume on a regular basis here in the UK that typically are reasonably invisible unless you're really interested in it. So that's where it is right now. It delivers its outputs, what we call as value to society. So the whole impact framework we call value to society. So for any kind of activity, is we can assess and evaluate its value to society, typically on an annual level or annual basis, I should say, to support the financial accounts, to the financial reporting of a business. And what it does is, so what is value to society? We have a methodology that quantifies and translates into value terms, something like in the order of 500 odd impacts. There's good balance between, the environment and what we call the other capital. So the environment we call natural capital, and people we call human capital, and know-how and experience we call intellectual capital. The stakeholder relationships and the trust that exists within those stakeholder relationships we call social capital. And then we also look at the more conventional manufactured capital, which is all built assets essentially, and property, plant, equipment, everything that features within a normal asset register within a balance sheet. And then financial capital is cash and cash equivalents. And what we do is we look at how a company interacts with those capitals, and as a result, that interaction generates a whole series of negative and positive impacts, and we go about then assigning economic values to them. So putting a dollar or a pound sign against all these different impacts. And so what we do is, and once we've got all these negative and positive impacts with their assigned values, is that we then, the positive ones we add to gross value added, and then the negatives we deduct from gross value added. And we use gross value added as the kind of base of this value society metric, because GVA, as it's called, gross value added, is quite a accepted and conventional measure of economic contribution. It shows the measure of gross value added shows in total the value of the jobs that are supported. So employment costs. It captures the taxes that are paid, and it captures the profits that are returned to shareholders. And these are typically seen as your conventional factors of production. So GVA has a reasonable amount of acceptance within corporations as being this conventional measure of economic contribution. And indeed, many companies have reported on that when they talk about their socio-economic impact. And you see these socio-economic impact statements in many multinational corporations, particularly when they're in territories and in countries that they do need to demonstrate that they are adding some value to these countries as well as extracting value. So we built upon GVA, adding and subtracting all these other impacts. And then when you net all that out, you get to this new metric, which we call value to society. And it's an overall picture of the value that any entity has delivered in an operating period for the host economies and societies that they operate in. So that's what we do. We do that, as I said, for a whole variety of different organizations. And then, there's, I think, an opportunity to package that up in a way to compete in the ESG market, which is very much more investor based. So investors now, I'm talking about entities like, Aviva Investors and BlackRock and all these big institutions, Legal and General. They're all managing lots and lots of money, and they're thinking about, well, how can we invest this capital in a way that delivers our necessary returns, but also minimizes the impact that we have on society and the environment. And so they're leaning more and more on using ESG data, where ESG stands for environmental, social, and governance data. And our methodologies and our frameworks deliver quite a novel set of ESG data that we think would be quite useful for the investor community as well.
I guess one aspect of decision making, and you're right, I think, sort of the sustainability side of investment and green investment is seen as a big growth area. I guess for your traditional customers, the organizations that you work with to measure GVA, in terms of Value2Society, what have you noticed these organizations use that data for? So how has it helped them to make certain decisions, to reframe how they operate or restructure themselves?
Yeah, so it's a good question, and why bother, with this whole the way we frame it is kind of impact, valuation. I mean, there's a few benefits. First of all, is that companies generate a whole series of impacts, and obviously a lot of it is unintended, but they do, and so they get to this point whereby at the end of an operating period, when they've got a team that's collecting this data, they'll notice that they've got, however many thousands of tons of carbon or thousands of meters cubed of water consumed, or waste that's gone to landfill, or sickness absence rate in their kind of employees, occupational injuries, bullying, harassment, inequality of opportunity, community investment, lots of community investment. So there's all these things that represent these impacts that all corporations have, to lesser or more of a degree. And so where do you start with it all? And so there's always been this need for, we've noticed the need, at least, that the companies want to understand, well, what do we focus on? How do we prioritize? Is this more important than that? And do we just react to what is seen as important in the media, or is there a better way of doing this? What's important? Now, a lot of companies develop these materiality matrices where, they'll hold stakeholder engagement sessions internally and externally, and they'll come up with a kind of more qualitative approach to what they believe are the material issues to their business. And what we felt is that we can be a bit more objective than that. So if you can translate all these impacts into a common denominator, i.e., money terms, value terms as we describe it, then you have a natural weighting. You now could compare impacts. So that's one of the reasons why we do what we do, is to provide this comparative capability. It also allows you then to aggregate, all of these impacts into these novel metrics. So I mentioned Value2Society, but we've developed other ones. The Crown Estate, their total contribution. Yorkshire Water talk about it in total impact. So we call it Value2Society, which is this kind of aggregate impact metric that can be combined with a financial metric. So if you were to net off all of those impacts with the profit figure, you could come up with a kind of notional societal profit number. So you can aggregate it as well. So you've got the comparison, then you've got the aggregation part of it, and then you've also got the integration part of it. And where that becomes quite useful is that, if you're thinking about the wider impacts of capital expenditure programs and different options, and you're worried about or concerned, or you just want to consider the wider impacts of those different options, is you can now integrate your carbon emissions, your water, your broader societal impacts into the same investment appraisal models. And so it has that added functionality. It makes the impacts more meaningful from our experience. So that's from an internal point of view, like why would you do it from a management point of view? And then from an external point of view, it makes it more digestible as well. Is that if you've got two companies that are reporting quite extensively and increasingly so amongst big companies around their wider impacts, but it's distilled down into a metric that has a level of acceptance and meaning, then you can start comparing companies as well. So, if you took two water companies or two food manufacturers, whatever it is, you can start actually comparing rather than going line by line on each one of their water emissions, their greenhouse gas emissions, is you can now compare them on a kind of composite aggregate metric. And that becomes quite interesting, not just, for you and I, consumers, but again, as I said, in the investor community, it's an interesting idea for them. And even obviously within other segments of society. So that's the kind of reasons for it. It has that internal capability and then a very lucid, I would say, external communications capability as well.
One thing that often comes up is, well, you can't put a value on some of these things, and then you see things about willingness to pay, certain ways of trying to monetize things that are intangible. And I know things like the government green book, where you kind of give the solid number of how much something costs, and then there's a bit of a fuzzy thing based on the qualitative assessment and notional benefits. And I think one of the other things that I've noticed is things like the National Audit Office sometimes criticize some projects that have been carried out, large infrastructure projects, for stating certain non-monetized benefits and then failing to essentially measure those as they're operating. So getting any actuals, for things like, footfall or, freight carried or whatever, just not recording those in any kind of meaningful way. And I think one thing that's of benefit is to monetize things because everyone understands money, or it's a universal language essentially. Yeah. So being able to monetize that makes it so that you can understand the impact of your decisions. One of the questions I've got off the back of that though is, how do you introduce that commonality where, in the capital accounting framework that Route2 use, does it require standardization across different financial practices, or is it sort of agnostic to that?
There's certainly, from our perspective at the moment, it's not requiring standardization, but it has to go that way, I would imagine. And I think that at the moment, there is this convergence happening with the main, I would say, non-financial reporting standards that are out there. So whether that be the GRI, which is the Global Reporting Initiative, which is one framework in which companies report on these wider impacts, such as greenhouse gases and human capital issues and governance issues and stuff like that. And then you have another one that's called SASB, which is the Sustainability Accounting Standards Board. And then you've got the CDP, which is the Carbon Disclosure Project. You've also got the Integrated Reporting movement. So these are all, to some level, competing. I don't think they really are. I think they are all alternatives and they all add a lot of value. But they've realized that they needed to converge around more of a singular reporting standard to accelerate uptake and increase the uptake. And you're definitely seeing conversations within those circles that there is a further step to take, which is, look, this is still satellite to financial accounts, and therefore, does it have as much potency? And therefore, so how do you get closer to the real core financial decision making systems within a business, such as management accounts and the financial accounts? So there is this movement happening whereby this idea of translating into value terms is definitely building in momentum. And there's I think there is a outfit in Harvard, coming out of Harvard now, called the Impact Weighted Accounts. And, it's coming out of Harvard Business School, so it's certainly got some credibility. And I think initiatives like that are all suggesting that the way forward is going to be evaluation of these impacts. Now, they may not be, a full regulatory requirement, such as, the existing accounting standards, but in time, I'd imagine that there is regulation around it, and there will be greater convergence around that. And in the meantime, you have outfits like Value2 that are just kind of trying to push that agenda and bring this information to light, because it changes the complexion on business performance. And the other key thing that I haven't really mentioned is that, from our point of view, is that these broader societal costs and benefits are actually future financial risks and revenue opportunities for businesses as well. And that's the key thing for us in our engagements, is helping them understand that. So the easiest example here is probably carbon. And because there's increasing acceptance around this idea of the social cost of carbon, and whether that's £50, £100 or £1,000, is just there is a gradual acceptance that there is a cost to our greenhouse gas emissions. And on top of that, there's also an increasing acceptance that a portion of that cost companies are going to have to bear soon. So this whole evolution of impact, from quantifying it to then assigning it a monetary value, to understanding that some of that wider value will end up being a real financial cost, or potentially a revenue opportunity for business, is happening here and now.
I can imagine that, in the wake of the new 10-point or the new green agenda basically coming out of the UK, but also off the back of the elections in America, with more of a focus on that, a refocus on that green agenda, that these practices will then have to be, or not necessarily have to be, but will be driven down that route of social value and monetizing the impact measurement on society. Yeah. But one of the things you mentioned there, which is carbon cost, and this is something that I've talked about in previous episodes as well. It's interesting because I think that's an area that, in terms of looking at the whole value chain of impacts, there's whole things that are a direct impact of carbon emissions that aren't often tracked. Things like the ocean acidification, and then the loss of coral reefs in the southern hemisphere. You can pretty much see a direct impact from sort of carbon emissions generally from the global north. But those kind of things aren't necessarily, I don't think, tracked in the cost. The other side of it, I guess, maybe more directly for individual consumers, because obviously we're talking a lot about large organizations and sort of monetizing the impact that large organizations have with the products that they develop or services they develop and sell. But we're noticing now that there are moves to put carbon labeling on products on supermarket shelves and things like that. To what extent do you think that might have an impact on consumer behavior versus, I guess, incorporating the cost of carbon and putting that into the price? Yeah. Obviously, putting to one side the fairness of passing the cost on to the consumer, because that's not necessarily my intention in terms of what we're discussing. But what relative impact do you think it has on labeling something with its cost per ton of carbon emitted versus actually putting the price on it?
Yeah, I mean, I think the price mechanism is the ultimate, market signal. It really is. I don't, I always kind of, my reference point is my own family, who as much as they support me in what I do, I wouldn't say that they're particularly active in this area as consumers. But I totally believe that if there was a price differential on two competing products in the supermarket, they wouldn't even need to necessarily, talk about. I mean, the various different impacts. I mean, I know that, food with the kind of nutrient labeling and stuff like that. I mean, that is effective, no doubt about it, and plenty of people review them and make decisions accordingly. I think, like from the consumer's point of view, and most people are, across the planet are not, they're looking to get by, right? I mean, it's not I don't think that most people have the luxury to really think about these things. They're busy trying to make the most of their lives, and I think that's the beauty of the price signal is that if you can incorporate the impacts, the cost of these impacts into the products, is naturally over time the highly impactful products would become less competitive, and the market would take care of impact. The problem is that the price mechanism doesn't capture those costs that we've been talking about. And for me, that is a great solution, and another reason why we should be putting a value on these things and integrating that into the way that businesses manage it, the frameworks in which businesses use to manage the business, and equally the way that they price their products. And I think the other side of it is also in just finance, and if you're fortunate enough to have a bank account as well, is that you should be expecting the fact that if I've got £100 in a savings account, is that it's being deployed by the bank to obviously make enough money to provide the interest rate that is stated, but not at the cost of the environment and social structures. So there's two things for me, really, is that as a consumer, is that you should be able to go into a shop, buy, and when you buy, that price is reflective of the full cost of production, and therefore you pick accordingly. That's what I firmly believe. And then second of all is within the whole banking system as well, is that we should expect our financial institutions to be serving our wider societal interests.
It definitely has an impact on how products might be designed or sourced or produced. If you're putting a societal value on it, and that is what changes the price, it has a price linked to a pricing mechanism, that can have an influence, obviously, on how the producer considers its designs and its processes. So I think it'll be interesting to hear the counter argument to that. But obviously we don't have time for that today. So I guess just to wrap up, would you be able to tell us a little bit more about what's coming up for Route 2, what you're planning on working on, where you see development of Route 2, and how people can kind of find out a bit more about the company?
Yeah, sure. So, I mean, with what we're really fascinated by are kind of data surfacing technologies at the moment. So in this process of quantifying impact and then assigning value, is that it becomes very important when you understand the location of where these impacts happen, because it makes a big difference as far as the magnitude of the impact, and certainly when you're trying to assign a kind of cost value to it as well. So we're looking at all sorts of technologies to improve the way in which we do that quantification, from citizen science-based applications all the way through to deploying Earth observation data sets into the way that we do our impact profiling. So Earth observation being essentially satellite imagery, and that whole area is really taking off at the moment. So that's from a kind of data and systems and frameworks point of view. That's very much where Route 2 is working hard to try and harness those technologies that are out there now. And then as far as the business goes, then certainly we're looking to push and get the Value2Society thinking as far and as wide as we possibly can. We think it's an important contribution to the way that a business is run. And then finally, as I mentioned earlier, trying to package that kind of understanding and the Value2Society thinking into a useful product for the entire investor community, which is increasingly looking to develop more responsible investment strategies. So that's the kind of future of the company. We're trying very hard to make what we do more tangible through these blogs that we post, through our website, and through our LinkedIn and through Twitter. And they're all about, sometimes, I mean, one of my colleagues said to me, it's always a bit sad, what we write, it's always these like huge costs to society. So we're looking at trying to add a bit of, positivity to it all, and talk more about solutions to these problems as well as all the negatives. But yeah, hopefully there'll be more and more material coming out of that channel as well. They're very reflective, actually, these blogs, of projects we're working on. So yeah, that's the way to keep in touch with what we're doing.
And that's today's episode. All the links for what we discussed are in the description below. Please like, share and subscribe on whatever platform you're listening on. Get involved on Twitter and LinkedIn. Drop a comment and let me know what you thought of today's episode. Thanks for listening and have a great week.